swept liquidity down here to the downside, and then I was looking like, all right, are there any imbalances that I could use? And then I was looking, and I was like, well, I didn't end up taking this, but I was like, well, here on the 1 minute, it cleared liquidity. It did leave an imbalance right here, but then it left another imbalance right here. And then, you know, it left another small little imbalance right here. And I don't really like when it leaves multiple, because that really confuses things. So then what I'll do is I'm like, all right, like it left too many imbalances on the 1 minute, which makes it a lot more difficult. So then I was like, all right, let me go to the 2 minute, went to the 2 minute. And I was like, it did leave some imbalances on the 2 minute. Like there's one right here. There's one right here. Again, multiple. And I was like, I don't like to take the ones that have multiple imbalances that I could trade through. So I'll just keep going through the time frames. And then I went to the 3 minute. I went to the 3 minute chart, and the 3 minute left perfectly just one imbalance. And as I keep showing this every day, you'll start to like see it more and more and more. But, you know, swept liquidity, then the 3 minute had only one imbalance. And the reason why this was attractive was because there's liquidity sitting right here and liquidity sitting right here. So, anyways, there's a little setup on the 3 minute. Went through the 1 minute, too many imbalances. Like, yeah, you could take them if you want, but you're not gonna have as much confidence, because when there's multiple imbalances, like, oh, which one should I take it off of? Where should I put my risk? But I just like to find the ones that only have one. But hey, it's pretty much the same thing we've talked about every single day. It comes down to sweeps liquidity. Did it leave an imbalance as it swept liquidity? Yes, no. Okay, does it trade through the imbalance? Yes, no. And then, you know. But anyways, chat, you looking at anything? You looking at any of the NASDAQ market, S&P market, just anything in general? I'll look at the positions that I have. I still have an NVIDIA position, QQQ position. That was literally break even. I'm up $1, whatever. So $24 on the day. Market was selling off a little bit, gap down a little bit, then had a continued sell-off, and now we're kind of rallying just a little bit. So we'll see what we get. But those are the positions I have. Here in a second, we'll go into the watch list and see what's out there and see if there's any potential positions that we like. And the things that I have been looking at actually are some of the assets that are related to crypto. I know we could do something like MSTR. We were looking at a little bit yesterday with Luis. This is looking pretty good. This is really up on the day. Jeez. You can see all the crypto positions have really just taken off. Did
you or Luis Luis so much end up getting a position in there at all?
Did we get into one of these positions? No.
Or you just looking at it?
No, just looking. But if I do, I kind of want to get a little exposure to the crypto market though.
Okay.
So I'll find underlyings. Yeah, that's why I didn't the other day, because these are $10 white strikes too.
Yeah.
I could. I mean, nah, maybe I won't. I'm not going to step in front of the train. Arrow, you need level 3 order book, better liquidity metrics. I'm going to pull this up and see. Let me know what you think about this mousetrap. Let me pull this up. I want to know your thoughts on this because I like that. Yesterday you shorted coin. I've been thinking about it too. Shorting NASDAQ market. Off the top of my head, I know there's some products, there's some stocks that are correlated with crypto, like coin. It's like, why is coin correlated with crypto? Because it's Coinbase. Like it's a platform where people buy and sell cryptos. That's why, depending on what crypto does, that's why something like Coinbase will be influenced. Oh, I might just put on a $10 wide. We'll go coin. First things first, is the IB rank pretty sufficient? Yep, IB rank 38.7. It's sitting above 20. I like that. I feel pretty comfortable. I know 20 IB rank is kind of that like baseline, like, all right, that's a sufficient IB rank to start looking for a position. Sometimes you'll see some stocks that have like a 15 and it's like, oh, the IB rank's not that high. And I know we like to look for things about around 20 and above. But sometimes it's like, you'll see something that's at 15 and you can still go into the options change and just see if you could put on a position that still makes sense. Yeah. But if it doesn't, you'll then be like, all right, you know, that kind of makes sense because the IB rank isn't even really at a level. But sometimes it's still, you know, kind of smart to just actually go into the options chain and see what it's offering you. But anyways, let's take a quick look at Bitcoin. Bitcoin is at 73,000, bro. All-time highs.
Hold on.
Bitcoin at all-time highs again today. It's so wild that crypto is hitting all-time highs and not as many people are talking about crypto like they were just like a few years ago. Yeah.
I don't hear anyone outside of the like really trading community talk about it too much. But back then, people who had no clue what it was were talking about it.
Yeah.
It was everywhere.
So, I mean, we could go 290, 300, 71% probability of profit, P50, 75%, collecting about 250 in credit. Not very attractive because if I collect only 250 in credit, $10 wide, then that means my risk is about $750. That's my max loss. Not super attractive. I really want to at least collect 330 in credit. I could scoot it in a little bit to 280, 290. 67% probability of profit, not terrible. But again, I'm now only getting, 265 worth of credit. That's not a third of the risk. And especially because it's a $10 wide, I want to make sure that I can collect enough credit so that I can, mitigate my risk and not take on as much risk. So maybe coin isn't going to be the option to go for me, at least. I can go a little closer, 63% probability of profit, receive a credit of 320. But now I'm just so close to the stock price. I'm still collecting just under a third of the width of the strikes. What do you guys think about this one, Mousetrap? Whenever you guys are in a position, how do you, I'm curious about your thought process. Because again, now I'm also sitting not even close to really the outside of the expected move. So I don't know if I'm feeling too comfortable for this trade, and forcing trades isn't really something I want to do. This order book, and let me know what you think about it, Mousetrap. It's something that I like to use sometimes in conjunction with the futures trading. But I am curious about your thoughts on, using an order book, especially when it comes down to, looking at futures, Mousetrap. I like to see how other people, incorporate it into their approach in trading and whatnot. I know what you think about this. This right here is a footprint chart. So a couple of ways that I like to use it is I like to use it for two things. I like to look for imbalances on, let me see. Had a short call spread around 300. It can break now, going to iron conduit. Not going to iron conduit. Oh, nice. Going to add on that other side of the trade. McDonald's. I'm going to check out McDonald's here in a second too.
Yeah, got a fat drop.
But yeah. Anyways, I really like to look at footprint charts too, and sometimes I think it can be pretty helpful. But one of the things that I really like to look at is the delta. And don't confuse this with the options Greek delta. This delta is going to be a little different. But one thing I'll look at, I'm on a 5-minute order flow chart right now. And sometimes the delta, okay, pretty much what the delta is, it's the difference between the buyers, the strength of the buyers and the strength of the sellers. So if within that 5-minute candle, we have, and there's a difference. It's the difference between the aggressive buyers and aggressive sellers. What's an aggressive buyer and what's an aggressive seller? An aggressive buyer is participants in the market that are using market orders to enter the market. So this doesn't show you all the orders, only the market orders that are being entered into the market. And sometimes it can give you an idea with where the momentum is shifting in the market and like where and kind of what people are doing and what their actions is. So whenever you see like a super high positive delta, that means a ton of orders were going through the market, hitting, using market orders, aggressive buyers, because they're not using limit orders. Limit orders are passive buyers and passive sellers. The reason why they call them that is because they're more passive. They put in a limit order in the market to automatically fill them whenever it comes to a certain price. So those are passive orders. And then there's aggressive orders in the market. And I think aggressive orders in the market help identify momentum a little bit more, because again, you see the current, and this I like this better than indicators. I personally am not very fond of using indicators in the market because most indicators are lagging indicators. Like, what I mean by that is it's like old information, like it's showing you what has already been done. And the order flow in the market, when it shows the aggressive buyers and sellers, it's showing what's actually happening right now, like in the moment. Mm-hmm. But anyways, so if we have like 1,000 aggressive buyers and within that same time period, we have 500 aggressive sellers, the positive delta would be plus 500. Because that's the difference between the aggressive buyers and the difference between the aggressive sellers. All right, so now I'm gonna flip it back on you. What if we have 2,000 aggressive sellers and 1,500 aggressive buyers? What would the delta be?
Negative 500.
Negative 500. So that would let you know there's more sellers, there's more aggressive sellers within this specific time period, depending on what time frame you have this set on. But that's something that I like to use. I think it's really interesting. It gives you a different perspective. But yeah, Mousetrap, if you have any I would love to see how you like to use an order book for better liquidity metrics. I always like to learn as much as possible and hear other people's thought processes and see how they kind of approach that. So anyways, that's what we got right here. And then right over here, if this will load, this is now the 1 minute. So each of these columns is a 1 minute candlestick. And you kind of see like these are candlesticks. And then when I zoom in, you can actually see the orders that went in and out of the market within that candlestick. And not only that, you can see where more of the orders took place, like where most of the volume took place within that candlestick. So obviously this isn't going to be really helpful if you're not a scalper, because why else would you need that type of information? You don't need information. You don't need that type of information if you're not making decisions within
quick moments. I was gonna say this is
it's useless other than that. But
yeah,
I've still been studying order flow a lot. I actually found some pretty good resources. And there's a lot of people that study it really well. And I need to do a deeper dive into it and just learn it and just I haven't not mastered it. Yeah, but I technically haven't like mastered it. Like I still have a lot to learn when it comes down to order flow. And I understand some things, but I know there's so much that I don't know. I know there's so much that I don't understand. And I think that there's this guy that made this order flow program thing, and I think I'm gonna buy it. Yeah, because I think that's just the best way to learn about things, especially within the market. I've wasted so much time and energy on things that I didn't know, I didn't need to know, but you just don't know if you don't know. And like, you know what I mean? So I think if you have the means to do so, it's super helpful if you can learn from credible sources, because it'll cut down your learning curve. Like you don't have to,
so much wasted time, like such a waste of time. Like learning straight from the source, I feel like is
because you don't know what to look for. Over time, you just have to piece it together. Like you start picking up on things, but that takes so much time. And if you can just directly learn from somebody and like, oh, this is how you approach this, or this is how you read this. This is what this means. This is what this means. Then, you just sharpen your learning curve. You don't waste so much time, and time is such a valuable asset. And again, the market is one of those things where most of the information for most retail traders, you have to figure out on your own.